Welcome to the Index Fund Review channel. On this channel, I review index funds and ETFs, looking at their past performance, the indices they track, the companies they hold, and so on and so on. In this video, I'll be reviewing my investment portfolio and letting you know what my goals are and my strategy to achieve these goals. So you might ask, why do you need investment goals? Well, without goals, what are you working towards? How do you know if you're doing good or bad without anything to measure against? How do you stay disciplined without guidelines to help you focus? For me, setting goals for your investment portfolio is really important. So what are my goals? Goal number one is to beat the performance of the S&P 500 over the next 5 to 10 years. And goal number two is to be globally diversified. My strategy to achieve these goals is to invest more heavily in the best performing sectors of the S&P 500. So if you look at the performance of the S&P 500 year by year, you'll see the overall performance here in gray, which is the market cap weighted average performance of all the sectors. And you'll see that some sectors perform below average and others perform above average. Let's look at information technology, for example. This sector has performed above average in 10 of the past 14 years. If we look at energy, this sector has performed below average in 9 out of the past 14 years. Looking at a list of all the sectors, we see the best performing sectors have been information technology, consumer discretionary, and healthcare. And the worst performing sectors have been energy, financials, and real estate. Now, I'm not brave enough, or some would say stupid enough, to just try pick out one sector and put all my eggs in one basket. My plan is to have some exposure to every sector, but also have heavier exposure to the sectors that I think will be the best in the next 5 years. Now, past performance doesn't indicate future returns, so the best sectors in the past might not be the best in the future. For example, this year, energy has been the best performing sector, mainly because it's recovering from a terrible year last year. But overall, I think following the macro trends of where the world is going, I'm willing to place my bet on which sectors I think will do best. So let's have a look at my portfolio. I have 4 funds in my portfolio: the LNG, Global Health, and Pharma, which focuses on the healthcare sector. This makes up about 13% of my portfolio. The LNG Global Technology Index, which focuses on the technology sector and makes up about 48% of my portfolio. Vanguard ESG Developed World All Cap, which is a all cap fund covering all sectors, and this makes up about 24% of my portfolio. And finally, the ASI UK Real Estate, which is a property fund consisting of REITs and other property related companies like Rightmove, and this makes up about 15% of my portfolio. If we look at how my allocation translates to overall sector exposure compared to the S&P 500, we see that I've got some exposure to all 11 sectors, and the sectors where I'm pushing for more exposure are technology, where I've got about 20% more, communication services, and healthcare. I invested in the real estate fund before I came up with this strategy, and in reality I don't want to have this much exposure to the real estate sector, so I am planning to sell out of this fund and distribute it across the other funds, so my weighting in real estate should reduce soon. Looking at how the funds in my portfolio have compared to the S&P over 1 year, 3 years, 5 years, and 10 years, the funds have outperformed the S&P. Now, of course, this doesn't guarantee that this will continue in the future, but I'm confident that the sectors that I've chosen to focus on will do well. So feel free to come back a year from now to see if I'm right or wrong. If I am right, then that ticks the goal, which is my first goal of beating the S&P 500. Moving on to my second goal of being globally diversified, my portfolio is about 64% in North American markets, about 24%, adding these up together, in European markets, and finally about 12% in Asian markets. You'll notice that I've got very little exposure to emerging markets, only 1.31%. This is something I'm conflicted on, so let me know in the comments if you think I'm missing out by not having more exposure to emerging markets. I have too much exposure to the United Kingdom market in my opinion. This is another reason why I plan to sell my UK real estate fund to reduce this focus on the UK. Besides these 2 points, I'm happy with my global diversification, so that ticks my second goal. So how is my portfolio doing so far? My total return is 23%, and looking at each fund individually, the book cost is how much I've invested in each of the funds, and the value is what I've invested plus my gains, and the loss, the gain/loss, is my return. So the real estate fund is at 27%. This is a bit misleading as I haven't added any money to this fund since December last year, so my cost basis hasn't changed at all since then. The healthcare fund is about 10%. Technology funds about 27% return. Make sure to check out my dedicated video on this fund for a deep dive on what it's about. And finally, the Vanguard fund is on 18%. Go check out my dedicated video on this fund as well. Let me know what your thoughts are on my portfolio, my goals and my strategy in the comments section, and I'll see you in the next video.